Welcome back. If you've just logged in right now, we have the Gift Nifty, which is indicating a sharply lower start for our markets, a 150-point downtick, and that's largely because of weakness that we've seen in the US markets overnight, owing to hotter than expected inflation and weak numbers coming in from Infosys, the IT pack as well. So to detail all these individual stocks which will be in focus today, we have the CNBC-TV18's top 10 list of the stocks. Let's talk about Infosys itself. That's the one that's beat estimates in the second quarter, with the revenue growth coming in more than 2%. But the fly in the ointment was the company lowering their top end of the full year revenue growth outlook from 3.5% to 2.5%. That's a stock we'll be watching out for, as the Infosys ADR was down almost 7% overnight. The other stock we'll be watching out for would be HCLTech. The revenue growth has marginally missed estimates. The companies lowered their guidance even as margins beat estimates. The brokerages believe that despite the underperformance of the stock, there could be room for further downside on HCLTech as well. So those are a couple of stocks we'll be watching out for. And that's not all. In fact, we'll also be speaking with the management of HCLTech at 9:30 a.m. here on CNBC TV18.
All right, let's focus on the other couple of names. Mangalam, you're tracking IndiGo going by train tomorrow, but tracking IndiGo for today.
Yeah, because you can't afford the IndiGo flights. And the good news is that they're the only, game in town when it comes to market share. The kind of gains that we've seen in IndiGo's market share. So two things really stand out. The first one, of course, is the overall passenger growth has been around 29% year on year, 18% month on month as well. And that's data that comes in for the month of September from DGCA. Importantly, IndiGo's market leadership continues. So their market share is close to around 63.4 odd percent, and that's followed by Vistara, which is around 10%. The Air India group on the whole, which includes Air India, Air Asia, as well as Vistara, is close to around 26.2%. SpiceJet and Akasa are close to around 4.4 and 4.2. The biggest reason why perhaps IndiGo would have benefited is, the absence of Go Air or Go First from the skies itself. A couple of months ago, the market share that Go First commanded has now come to Interglobe itself. So they have benefited from lack of competition. The question now is, with Akasa slowing down operations as well, will there be more market share accruing to Interglobe Aviation or not? That's something we'll be watching out for. And secondly, the big positive for them is that crude has remained range-bound despite the global volatility that we've seen. So at around $86 per barrel, maybe this would be good, and that they've added some fuel surcharge as well. So it's more, market share in airspace being gained by IndiGo.
Well, that's perfect, right, Mangalam? Go Air, that 6.4% that they had in April, the entire chunk has gone to IndiGo because their market share went from around 57% to around that 63% odd. Let's move across to Ekta. She's here because she's tracking a couple of those pharma names. Morning, Ekta.
Morning. I'll start with Lupin, which is in focus because they've received a tentative US FDA nod for a particular drug which is used for narcolepsy. So it is called X-Wave Oral Solution. Its size is $958 million for the year ending December 2022. The company has said that they are exclusive first to file and may be eligible for 180-day exclusivity on this particular drug as well. Separately, I'm tracking Dr. Reddy's because their Bachupalli plant, the biologics manufacturing plant, is issued 9 observations by the US FDA. There was a pre-approval inspection, which is generally for products which they filed for and they're seeking US FDA approval. The inspection was from the 4th of October till the 12th of October, and they've been issued 9 observations, so that particular stock could be weighed down in trade today.
All right, Ekta, thanks a lot for that. Meanwhile, just keeping an eye out on Mphasis as well. This morning itself, they've announced an acquisition. US-based company Sonic Partners for almost $132.5 million in cash. That's close to around 1,100 odd crores. The revenue of the company that they acquired over the last few years has increased from 54 million in CY20 to around 76 million in FY22, or rather CY22 itself. So that's a 50% jump that we've seen in just about 2 odd years. The acquisition has valued the company at close to 1.74 times sales, and it adds to 4% of the company's overall revenue. It will be interesting to see how that goes. The street likely to like it, but, with the overall weakness that we're seeing in the IT pack, let's see where the stock goes, Nigel.
Okay, all right. Well, let's hop across to Upasna. She's here to tell us about some earnings that came out post-market hours, Angel One and Anand Rathi. Upasna?
Anand Rathi Wealth has recorded a good set of numbers in Q2 FY24, and in terms of AUM growth, we are seeing a double-digit AUM growth of almost 10% sequentially. Revenue from ops saw an uptick of almost 4.3%, and PAT saw growth of almost 8.5%. The company has also raised its AUM growth guidance for FY24 from 47,000 crores to 51,000 crores. It has also raised its revenue guidance for FY24 from 661 crores to 720 crores. Now, next up, moving towards Angel One. Angel One has also recorded a good set of numbers in its Q2 FY24. The revenue saw an uptick of almost 30% on quarter-on-quarter basis. PAT also saw an uptick of almost 38% on quarter-on-quarter basis. The client addition also saw growth of almost 60% on quarter-on-quarter basis, and the company's client base expanded by almost 13% sequentially. The company's average daily turnover also saw an uptick of almost 30% on quarter-on-quarter basis. So all in all, we are seeing a good set of numbers coming in from Angel One.
All right, Upasana, thanks a lot for that. Meanwhile, Nigel, you're watching out for some other numbers as well. Kesoram, Case in Point, and GMR airports too.
Well, that's right. Kesoram because of their numbers and GMR because of the operational update. For Kesoram, those numbers look disappointing. On the top line, there was a growth of close to 13%. That's because volumes have gone up. So that's good to see that they're maintaining their market share or maybe increasing their market share. But it's come at the cost of margins because the improvement on a low base is only 130 basis points odd. Why is that? There was some cooling off in other expenditure, but power and fuel as well as packaging and carriage costs, they continue to remain elevated, which is a bit of a worry. Then they delivered a net loss, and their finance cost has gone up yet again by close to 9%, though the management has been talking about paying some part of the debt off. So we'll have to find out why exactly. If they're paying even 50-60 crores, why should the finance costs go up? So we'll find out that. The other problem is they have this rayon and chemicals business, which continues to remain, deliver a net loss. The only positive for them is that on an EV basis, it trades attractive at close to $53 per ton basis. And the street will be waiting by for any kind of commentary with regard to refinance, repayment of debt. We'll try to get you the management in the next 1 hour or so to clarify on why these numbers look weak and should we see a bit of an uptake from here on. The next one we're looking at is on GMR airports. They've declared their total passenger traffic growth for the month of September. Mangalam was talking about, the airline stocks earlier. And it seems there's plenty of interest out there. So 23% growth on a year-on-year basis gets a thumbs up. So that one as well should open up in the green. But for the time being, let's do a quick recap of all the top stocks we're looking at. Stocks with positive news flow. They include IndiGo Aviation, Lupin, Mphasis, Anand Rathi Wealth, Angel One, and GMR Airports. While stocks with negative news flow include Infosys, HCLTech, Dr. Reddy's, and Kesoram Industries. Okay, those are all the top 10 stocks that we're looking at, but plenty of brokerage notes came in earlier today, and Sudarshan has gone through all of them. He's picked up a few to narrate to us. Hey, Sudarshan, morning.
Good morning. In the brokerage corner today, I have two stocks in my list. First one is NTPC. Bernstein has an outperform call with a target of 274 per share. It highlights 4 catalysts. First one, commissioning of new plants. Second one, potential renewable wins. Third, tenders for new plants, and last is regulatory order. Also, talking about the businesses, Bernstein says in thermal, no one else is adding capacity, but NTPC is. In renewables, no one has as much money as NTPC is. Also, it has a huge advantage on borrowing cost and receivables. In green hydrogen, private players are making a beeline at NTPC to build renewable energy power plant for their green H2 project. The second one in my list is UBS on Axis Bank. It has downgraded the stock to neutral from buy, and target is cut to 1100 from 1150 per share. It says margin is nearing peak levels and credit costs are almost at the bottom. UBS expects ROA, that is return on assets, to contract in FY25. It expects single-digit NI growth in the next 3 quarters. For FY25, UBS expects ROA to moderate to 1.5% from 1.76% in FY23, and ROE, that is return on equity, to moderate to 14.9% from 18.2%. On valuation front, it's trading at 1.9 times FY25 price to book value, which is near to its 5-year average. Factoring all these, UBS believes there is a limited upside potential in Axis Bank.
Sudarshan, thanks a lot for that. NTPC and Axis Bank are the stocks that we'll be watching out for on the back of brokerage commentary. Positive for NTPC, not so much for Axis Bank. But that's about the equities arena. Let's get in Manisha for a quick roundup of all the action from the commodities market overnight. Manisha.
Thank you so much for that, Mangalam. Well, I'll start with the metal prices, where we are seeing some support continuing. So copper is keeping above its 4-month lows. We also saw the iron ore prices continue to gain up. The dollar index is still off its 11-month highs, and China is talking about yet another stimulus. The economic data that we've seen in sense of inflation from US also seems to be on the positive side, and that has been supportive. Same is the case with the crude oil prices also, while of course there is some pressure because we've seen the US production at a record high, and the US inventories have gained up by a big 10.7 million barrels. But on the other side, there are now US sanctions coming in on tanker companies carrying Russian oil above the G7 price cap of $60 a barrel. That seems to be really supporting the markets right now. With these caps coming in, the discounted cheap crude from Russia could perhaps be curbed, and markets are weaving that premium into the prices. In any case, we yet to hear the last word from the Palestine and Israel conflict, so markets keeping that premium in the prices also. So the Asian markets working with nearly a percentage point of gains for the crude prices right now.
All right, Manisha, thanks a lot for that. So that's all the roundup coming in from the commodities arena. With that, we'll take a short break. On the other side, we'll have Nishal Maheshwari of Centrum Broking coming in for some fundamental stock analysis. Stay tuned.